All right, welcome back to another market recap. Today we have a lot to review. I was not expecting today to be good because we have non-farm employment tomorrow. You can see that tomorrow is Friday and we have non-farm employment as well as both of these, but the non-farm employment is the big one that comes out tomorrow. Now, we also had news today, but with non-farm employment tomorrow, it made today lower probability. However, there were so many good trades you could have taken regardless. Even though I didn't take a trade, I spotted 5, maybe 6 profitable trades you could have taken today. So let's jump right into the charts, starting with the best one. Can you believe this trade? If you took this up to the previous day's high, this would have been a 9-to-1 risk reward trade. Absolutely insane. Now, I would have taken essentially all off at this data high for a 3-to-1 risk reward trade. But we'll get more into this in a second. Let's start from the very beginning of the day. So, we also have trades today. We only have trades from Dodgy today. We have one trade where we have this inverse for value gap back down to this low here, and then the trade that I just discussed. So we'll take a look at both of those in just a second. Let's jump right into the charts. So first, we'll mark out Asia session. We had Asia from 20 until midnight. Here we go. 20 until midnight. London session from 2 until 5. And then here you can see that we swept London's highs. I just noted this out in the morning. I said we swept London's highs. This makes me think that we're going to take some kind of lows down here. So the first trade you could have taken was your classic TJR type trade where you had a sweep of London highs. And then you had a break of structure right here. This was your market structure shift. And then you had this fair value gap right here that you would enter on. So you can see right when we pushed into this fair value gap, this would be your TJR style entry. Your stop loss would go above the high, and then your take profit would be, I would have your take profit be at these 2-hour lows. So I marked out this right here, and then if I go back out of the chart and zoom back in, you can see the 2-hour lows were marked out right here. This would be where I would take a lot off, and you can see that we just barely hit that target. And then boom, right down to the lows. Now if you had your stop loss, now it's important to note that this was also a unicorn setup because we had a high, low, higher high that swept liquidity, lower low. So this was also a breaker block right here. So this was a fair value gap overlapping with the breaker block. Stop loss goes above, you can put the stop loss above the fair value gap or above the breaker block or above the high. Either way you want to do it, this was an amazing trade you could have taken. So really great trade. Now, obviously you could have left runners to say like this fair value gap right here. This was like a 15-minute fair value gap, and then also London lows, but those clearly would not have hit. But great trade. Next, we have our trade that we just discussed. We had 2-hour lows swept. We had an SMT here, so you can see that the NASDAQ formed a lower low from 921 to 930, and then we had the S&P. Let's see here. S&P formed a higher low right here from 921 until 930. So there was a bullish S&P right here. We had S&T, at which point it's important to note that you would not take this inverse fair value gap because you still have a fair value, an external gap right here that you need to see get inversed first. So yes, this closed above right here, but we have an external gap. You need to wait for this external gap to get inversed. So you would not enter on this candle close, but instead you would enter on this candle close. Your take profit would be at the data highs. Your take profit would be at the data highs, stop loss below the fair value gap. And this is a data high. It doesn't really look like it, but when you go to the 5 minute, all of a sudden it becomes a lot more clear that this is a data high, right? So you mark this up, and then here, data high. And then we went straight up to those data highs. So stop loss below the fair value gap, and take profit at the data highs. You could take, and then if you wanted to leave runners, you could leave runners for Asia's highs. You see we hit Asia's highs, and that would have been a 6-to-1 risk reward trade. So here's Asia's highs. And then if you wanted to, you as well could have left runners for previous day's high. All the way over here. So if I go back in the chart, you can see that this would have been almost a 9-to-1 risk reward trade. So really cool, really great trade. But I would have taken most off at this data high. So next, after that happened, obviously we swept previous day's high, right? And we then got this 1 minute market structure shift. Obviously, this could have been an inverse fair value gap setup, but we closed way too far down for this to actually be a valid inverse fair value gap setup. So we got this 1 minute market structure shift right here. And then at which point we retraced into this fair value gap and this overlap with this breaker block. So you see this is a high, low, higher high, lower low. So this is a breaker block. And I actually caught this one live in my live stream, so you should go check that one out. Check that out. But this was pretty crazy for me to catch. Some people watched me mark this out live in the live stream, so that was pretty cool. So this was a fair value gap overlapping with a breaker block. Your entry would probably be in this fair value gap somewhere. Stop loss either above the breaker block or above the fair value gaps or above the swing high, whatever you want. And then TP1 would be here, TP2 would be here, and obviously you need your stop loss to break even as soon as you can. So probably at this, either this low or this low. So anyway, then I would say the clear target here would be this fair value gap. So I would take most off at this fair value gap, this 5 minute fair value gap. Because I wouldn't know for sure that we were going to make it past that fair value gap. And then you could have put stop loss above the breaker block and the fair value gaps as well. So possibly, probably like a 1.5 to 1, but could have been a 2 to 1, just depending on where you entered. So anyway, next, this would have been an okay setup probably on the 32nd, but you can see we closed way too far up. So you can see this almost, if this closed above a little bit higher, then this probably would have been valid, but this close was not above this gap, so that's not valid. So this one wasn't valid. Next, we had this sweep of this high, and then this trade was probably like a B setup, but it's possible you could have taken it. We had this gap here. Maybe this could have been an A minus. Top, center, okay. IVG, you can see we closed, whoops. You can see we closed below right here, but the problem is we had this giant wick making like my confidence for this trade go down a lot. So I wouldn't really trust this trade, but you could target this low possibly. But there's an external gap here, so this one definitely a B setup. But yeah, you could move stop loss to break even here and then targeted here. So I would not say that that one was one I would take in lifetime just because of this giant wick. Then obviously there's this inverse value gap, but that's we're not really sweeping a low, we're not delivering from anything, so not really high probability. And then we had the final trade of the day. Here we can see Dodgy posted this trade. He said, Happy National Boyfriend's Day. I am the ICT. Yeah, he just marked out this fair value gap using the 1 minute chart. So you can see he took these two candles right here and he basically said, like, look, this is all one fair value gap. And once this closed below, he's like, okay, I guess we took out this low here, but I guess he's saying it's still valid even though we took out that low for some, I don't know. I wouldn't have taken this because we took out this low, but since Dodgy posted it, I will cover it. Stop loss above the fair value gap, the newly created fair value gap, target, sell side liquidity. You can see that this is more or less not exactly like perfectly generated low resistance liquidity, but this is trendline liquidity, right? And so we ran down to this low, 1.85 to 1 risk reward trade. So very, very good day today. Even though it was the day before non-farm employment, it was still a really good day. And yeah, tomorrow should be exciting. So I will see you guys in the next one. Bye.